the fact sheet for XGRO, one of my most held ETF funds. The first thing I'll point out right away, you can see that this is an October 2025 fact sheet. They are updated quite frequently, so make sure you have the date accurate. So let's go to the overview. The overview is, as one would expect, a very short, brief summary of what it's all about. So long-term capital growth sounds like a good thing for a retirement kind of fund. And it is an equity and or fixed income security kind of ETF, which is exactly what I'm trying to do. Specifically, if you look at the key benefits, it tells you exactly what it's trying to invest in: 80% equity, 20% fixed income, which aligns with what I'm trying to achieve with my retirement portfolio. The beautiful thing about this and other all-in-one funds is that it's automatically rebalanced to keep those asset classes in check. So that's great if the equity markets go a little nuts like they have of late. That means that XGRO will automatically sell some of those equities and reinvest them in a fixed income portfolio. So no emotion, it is just an algorithm that's doing it, and it's very, very simple. Other thing I like about it, because I'm a cheapskate, it is a low cost fee structure. It only charges you 0.8%, 0.18%, I'm sorry, and that includes all underlying ETF management fees. A lot of people think that somehow the fees stack upon each other because XGRO actually holds a bunch of other ETFs, and people are afraid that they're paying a lot of money to manage their funds, but that's not true. It is an all-in-one fund, and you get an all-in-one fee that includes all the fees underneath. What else is interesting? Of course, now we move into sort of the performance side of things, and all of the fact sheets have this growth of hypothetical chart in them, like so. And that's kind of interesting, but I don't really pay that much attention to it. For the main reason, and it's even in bold here, past performance is not necessarily indicative of future performance. So just because your chosen ETF returned 1,000% over the last 6 months, it doesn't mean it's going to do that again. Nobody can predict what things will happen, but what seems to be true is that the general direction of the stock market is up, and if you're patient, you can make money at it. But this growth of hypothetical 10,000 is a standard chart in all of these fact sheets, so you can hold stuff right next to each other and see how they've comparatively performed. Interesting here, of course, is the management expense ratio is 0.2% overall. And for $10,000, that doesn't translate to a whole heck of a lot. As you invest more, it starts to become significant. But for me, the ease of use and the automation of it is worth it. Then you have these kinds of charts here that talk about how it's performed. Cumulative performance, not really interesting to me. Annualized is slightly more interesting, I guess. And its 10-year annualized performance, it's on average returned 9.59% every year. But that doesn't mean it will return 9.59% next year. You can kind of get a sense of how volatile a given fund is by taking a look at the calendar year performance, which again is completely arbitrary. But everyone understands the calendar. So what it's telling you is that, yeah, over the last 10 years, 9.59%. But in 2022, if you were invested here, you would have seen your net worth decline by 11%. For some people, they make bad decisions when they see performance numbers like this, and they sell off, thinking that they're going to, avoid the worst of things. But the problem with selling when the market is down is that you also have to remember you need to get back into the market, because very frequently you end up with very high performances very shortly thereafter. So you have to be correct twice. You have to get out of the market at the right time, and you have to get back into the market at the right time. And in my experience, nobody knows how to do that. So you just stay invested, and you end up with the nice performance. Distribution yield, important to some, not to me. What matters to me is the overall performance. But what this means is that this, if you have $1,000 invested, you can expect to get $13.30 in dividends over the following year. That's based on historical performance. It's not necessarily what you will get next year, but for a fund like this, it's probably going to be pretty close. Here's something interesting about XGRO in particular, which I noticed when I read the fact sheet, is that starting in 2018, they made a fundamental change to XGRO. I don't know exactly what that change was. I'll have to take a look. But what it means is that performance prior to 2018, you're effectively looking at a completely different ETF. So going too far back, you're not really comparing apples to apples anymore. And funds do this on occasion, so you need to be aware of that and take a close look to see if what you're buying today is what your neighbor bought 2 years ago. It may or may not be true. All of this is on page 1 of the ETF fact sheet. ETF fact sheet number 2 gives you the breakdowns, right? And for an all-in-one fund like XGRO, it's a fund of funds. It holds different ETFs. So here it's not quite as transparent as it could be because it's accurate. What it holds are a bunch of other ETFs. Underneath each of these ETFs are actual stocks. So if you were to go and look up the fact sheet for the iShares Core S&P Total US Stock ETF, you would find the usual suspects in the top 10 holdings. And by the usual suspects, I mean NVIDIA and Google and Meta and Apple and Tesla, all those kinds of, the Magnificent Seven and a few others. So, that's in this case, it's maybe not as clear as it could be, but by looking at the fact sheets for the underlying ETFs, you can get a very clear picture of what exactly you're holding when you hold a share of this ETF. Moving further down, you get the equity and fixed income percentages. That's great. 80-20, as it states, it's not quite right on target. They do rebalance on the fly. And then here you get a sense of what kinds of countries they're investing in. So, 40% in the US market and so on. Now that's kind of interesting, right? So equity is 80%, US is 40%, and if you look here, you've got their stock of 36%. So we're missing 40% in the US breakdown, and I think what you're going to find is, yep, you've got a couple of bond funds being held here that account for the missing percentage points. So not only does XGRO invest in US equity, it also invests a little bit in US bond holdings, which for me is, not a big deal either way. It's nice to have a little bit of variety, I suppose, and given the current interest rate disparity between the US and Canada, US is about 1% higher than Canada right now in terms of the underlying interest rate. You can make a lot more money in the bond market in the US than you can in Canada right now. The rest of the pages of the fact sheet, go into the sustainability characteristics in terms of exposure to ESG parameters. I'll be honest, I don't really pay too much attention to these. Broad indices tend to have, kind of a broad coverage of the market. Some of the companies underneath are good from an ESG perspective, and some are not so good. There are, of course, funds that really try to invest in ESG-friendly funds, but those tend to be a lot more expensive, and expense for me is king. Then page 4, I think, is just a bunch of regulatory stuff and definitions and so on, which I think are more or less the same in every ETF fact sheet I've ever seen. That's it. Quick overview of XGRO. Hope that was helpful.